if you're just tuning in, Al was shedding some light on how the successful are creating multiple sources of cash flow, some of the different asset classes that they're using, the futures market, the Forex market, and just the key takeaways there is they're both 24-hour markets, but they also have leverage or buying power. So brokers require less. So the average person can utilize what they have because those brokers require less. And Al, as we get into this next segment, we have a lot of listeners that want to understand how the successful investors are investing for retirement. What are some of the techniques and the concepts that they're using within their 401ks or their IRAs? Now, let's first talk about, let's get in, most of our listeners, or I should say a lot of them, do have 401ks. And they feel like they're just stuck with what their options or their what they can do with them because they're kind of limited to just mutual funds. First off, why is that? And let's get into the fees with those before we get into self-directing. So let's talk about the 401k, what that is, and how the average investor can maybe make better decisions in there.
Yeah, when we talk about 401ks, we're talking about an employer-sponsored retirement plan. We're also including 403bs, TSPs, whatever your employer-sponsored retirement plan is. They're all pretty similar. And typically what are offered in those retirement plans are mutual funds, maybe some exchange-traded funds, which is similar to a mutual fund. It's a basket of stocks or an underlying that mimics something. It could be one that mimics the S&P 500 or technology or healthcare. And then there are some of those portfolios now, those retirement portfolios, that will allow you to do individual stocks. But the problem is that most people that have an employer-sponsored retirement plan are not getting advice or help in how to set it up or how to make changes within it. So really, they're managing their own accounts. They're their own pension fund manager, so to speak.
Yeah. Well, what happens is people they have their 401ks and they never even look at their statements because they're so afraid.
Well, they're afraid, and they don't really look into what's in those accounts, what the choices are, or why you would make one choice over another. One of the things that we provide is what we call dynamic 401k management, how to better manage what's available within your 401ks, maybe how to look at what the costs are and make some changes there, because there are fees that can have a significant negative impact on what you have when you retire and go through your retirement. And people just assume that that's part of being in the market is paying these fees. Well, that's not true. And a lot of people want to look at self-directing, having the ability to have an account that doesn't have fees but gives you many more choices. If you're limited to mutual funds, it limits you in a number of different ways. Number one, it limits you in the ability to participate successfully in a down market, in a correction or a bear market, because mutual funds will only make money when the market goes up. Mutual fund managers cannot short the market. They can't change what they're invested in. They can't go to all cash. So you're really in a one-direction kind of a situation in these retirement plans. We can show people how to hedge those portfolios, for example. People are
what does hedge mean?
Well, that's protection, protecting what you have, maybe having something that goes the opposite direction of what some of the other things that you have. That's true diversification, is not having all your money into something that will go only one direction or is highly correlated to everything else that's in that portfolio.
Yeah, I'm glad you brought that up. A lot of, we talk to a lot of people in these investing classes, that we have. And everybody wants to be more comfortable, but they just don't know how to do that. But they want to protect what they have because, if you lose it, you can't use it.
That's correct.
And, it's all about having more during retirement so you can do the things that you want to be able to do. And that's what the successful institutions are doing, is they're protecting their retirements, hedging, like you said. There's different ways that you can do that. So, Al, we kind of talked about the 401ks. They're kind of limited to some of the opportunities that investors have just because you typically will have mutual funds. And I've talked to a lot of people and they say, oh, I'm in mutual funds and I love it. Mm-hmm. And they don't understand the different opportunities that are out there. They're missing opportunity. That's that FOMO, right?
Right.
And so you talk a lot about self-directing and what that really is. So let's dissect self-directing retirements, especially like the IRA, because a lot of people have IRAs, but they're with brokers.
Sure.
They feel like that is how it's supposed to be. They're supposed to have their broker manage their accounts. well, there's opportunities as us as investors can manage our own money. So talk about self-directing.
Well, years ago, especially for the people that are retired now or maybe getting ready to retire, if their experience in the market started many, many years ago, the only way that you could really participate was through a broker. The high-speed internets weren't available in our homes. The discount brokers weren't out there. So people got used to calling a broker and relying on a broker to place a trade and to kind of control their assets. Things have changed over the years. Now with the internet and the availability of very sophisticated trading platforms, we have advantages really that I think give us a leg up over some of the advisors and the brokerage firms. We can be much quicker in what we do. An individual that has a portfolio can take a position or get out of a position just in a matter of minutes or seconds, actually.
Well, it's how it works. It's electronic, so you can click a buy or a sell button on a computer. I mean, it's a click of a button.
As long as you have a digit that can push a button on a mouse or a computer, you can trade. That's a huge advantage, and it's also a disadvantage. It means that anybody can participate in these markets, but that means people are participating that have no idea what they're doing, and they're just kind of throwing money at the market, hoping things work out.
Yeah, that's why it's so important to become educated first.
Correct. You want to get the right education, and part of that is not just the knowledge that you need, but it's also the skills to use that knowledge, and all of those things should be wrapped up in a plan. And that plan should have you follow a set of rules, a step-by-step process that really becomes kind of methodical and as much as possible takes the thinking and the emotions out of your trading and your investing. And what we're finding is that when people are coming into these classes, the advice they're getting from Wall Street is kind of, this is the default advice: work longer, work during retirement, get a side job or a side gig, they call them, downsize your homes, downsize your lifestyle. And people don't want to accept that as their plan going into retirement. That's when you should be maybe elevating your lifestyle or certainly enjoying what you have. You mentioned one of the key points in going into retirement a few minutes ago, and that's protecting what you have. Yep. And I always say there's two things I like to emphasize. One is don't lose it, and one is don't use it. And what I mean by don't use it is look at what you have in retirement, whether it's in a 403, a 403B, 401k, or an IRA. That's more important than whatever the size of that portfolio is. If in a self-directed IRA, an individual has a much greater opportunity to participate in a successful way or in a more beneficial way, because there are different assets you can use. The futures, Forex options we talked about can be used in an IRA. You can do that with no fees if you're self-directing. So a number of advantages there, and it's your money. You can take control of it, and there are brokers. Most of the brokers out there will let you self-direct.
That's the key, because who's the best steward of your money? It's going to be you. It's not going to be somebody that you may not know or you may talk to once or twice a year, and that's kind of the theme, or from what I hear is brokers are, if they're calling them once or twice a year, that's about it. And it's all about having more confidence and comfort going into retirement. So, Al, we have a lot of listeners that are planning for retirement, maybe 5-10 years down the road still. There's time to learn different techniques and different concepts. But we also have a lot of people that are retired right now and want to continue their same lifestyle. So, Al, coming up next in the last segment, we have a lot of listeners that just don't know how to get started trading and investing, but also don't know how to create that plan. You talked about having a plan. And we also want to cover how the successful are creating income during retirement. Like you said, don't use that retirement dollars. Right. We will be right back.